Good afternoon, everyone, and welcome. It is Tuesday, April 14th, 2026. Trading Trends with John Salama, CMT here. Boy, oh boy, as I said, there's always something going on in the markets. Let's get to it. It does look like that was a 2.5 week bear market correction, whatever you want to call it, that we were in here, and we are very close. I believe last I checked, less than 1% away from new all-time highs in the market. Let's get right into it. And the quarterback is the one, your boy Jalen Hurts here, doing the work. It's the semis and the SOXX. NASDAQ up many days in a row now. That's your number. This is the headline for the day here on what is the biggest multiple standard deviation movers to the upside and the downside. Ark, a big day for Ark. Ethereum, to me, the greatest greed to fear reverse indicator. It's Ethereum. Once they get into that, that's absolutely mega risk on, and Ethereum having a 2 sigma jump today. We'll take a look at that. And also silver jumping 4%, while energy, that's what was the victim today, coming at the hands of energy, declining 3%. And new all-time highs for a look at that. Semiconductors, not usually a bad thing if you're a bull for the markets, beta, long in any kind of way. Taiwan, which is, again, Taiwan Semiconductor, a major holding of Taiwan. And again, the SOXX, different weighting versus the SMH, one's much heavier NVIDIA and different weighting for Broadcom, Micron, etc. So a lot of good things working in that regard. Once I see that, usually has the wind to your back, usually a big tailwind there. I'm almost guaranteeing that VXX goes lower once you see SMH and SOXX go up over and over and over. But as I said, it's been about a week since my last show. Turtle notes, big ones. So if you recall, last video, which was mid last week, portfolio was pretty small, pretty flat for the most part. As of today, we dipped in biotech on yesterday, and then today truly remade the portfolio. Obviously, no more shorts. We are long, as I said, the aforementioned biotech, and we are also long Brazil, Taiwan on the all-time high breakout, as well as semiconductors, SMH on the all-time high breakout. We'll look at some of these charts, of course, and of course, as I said, turtles always position size based on ATR. So maybe we'll share today the levels if you were to also get in the trades with me today. The rally is a little bit long in the tooth. It is extended. We will take a look at the relevant charts today. Let me make sure we are in the dashboard panel, and let's get right into it here. What a rally. There we go. We should be seeing that there. Okay, so 693 SPY. We'll pay attention to the SPY in a minute. But here is a big power of the SMH up nearly 3%. NVIDIA all the way back to 194. Remember, stocks do have memory. They do not have amnesia. That was a huge level. If you check my tapes back from Feb, we wanted to see NVIDIA get above that 190 level back from the November earnings. And with authority, it's finally doing it today, getting above that level for the first time in a while. Q's up 1.5%. Tesla feeling the love, up 3.5%. Micron, world's best stock, official. It's been official, up 4.5% today. Amazon up a massive 4% today. Again, JP Morgan reported earnings this morning, basically kicking off the season, saying the markets are resilient. They crushed it in trading and fixed income revenue. What else is new? Microsoft up 2.5%. Oracle up 4.5%, had a huge day the other day. Meta up 4% since they announced AI plans last week. Palantir up 3%, even getting in on the love in the defense game, although it's been in a drawdown, down 23% year to date. Google up 3.5%. Intel not feeling the love today, down 4.5%, but it's had a ridiculous year, up 70% year to date. AMD up 2 1/3. IBM getting the love, up 1.2% today. Marvell up 1%, and as I said, Taiwan Semi powering a lot of the EWT move, up 2.8%. Here's the intraday tape. Yes, it has been low volume yesterday and today. Much of this rally, it's been lower volume, but that's not an awful thing. It has been really low volume, though. Today, we are on pace for something like 60 million shares in SPY, and we average do about 85 to 95 million shares. So it has been a little bit inside in terms of volume, but here's the intraday tape. This was a gap and go in terms of the opening bar here at 688. I'm rounding for simplicity's sake, and they've just been buying it all day. 12:30, just 35 minutes ago, we finally saw a little bit of, if we want to call it profit taking. It took us from the highs on the day, 694 to roughly 693, and here we are again. But it doesn't look like VWAP is slowing down. That level at 691.40. As long as we hold that, we could get to the 694 back there again. By the end of the day, even maybe 695. Obviously, the pain trade is higher here. I don't think there's many shorts left that didn't cover. So again, here's what I'm talking about, the 2.5-week bear market. Officially, check my tapes, March 19th, officially declared purgatory. A close under the 200-day moving average is a trend change, significant. Be weary of the trend for that time. I'm not saying it lasts 9 months, but do understand that you were in a tough spot, and we were continuing to be in a tough spot until that massive gap up April 8th, 6 days ago. The market changed there when you got that Pakistan asking Trump for a 2-week ceasefire, say, hey, wait a second, let's delay civilization cancellation for just 2 weeks, please. And then he said, okay, and that honestly changed things. So you don't get if you don't ask. See Pakistan. And then that was it. So that right there is hence from March 19th to about the 8th, call about 19 days, roughly 3-week bear market. And then boom, here we are at 693. Don't forget the all-time highs put in January 28th within a rock's throw away here at 697.84. We are $4, obviously less than 1% away. 66.6 RSI, the strongest we've had in the market on our way back to the prior NASDAQ highs when everything in that flywheel was working in terms of risk on Bitcoin. It was basically buy assets, buy any assets. We are this strong again in the RSI right here. So looking at this all structurally, and this is why I especially got bullish. If you recall what I said before, there's I believed due to the piercing of this all the way down to 630 during the trough of March 30th, at the peak of the sell-off when we hit 27 RSI. I thought the bulk of the energy would have been basically exhausted, getting to 680 tops, getting cute 680 at 683, 85 max level, and it's very been impressive in the last 2 days. Hence why the urgency to the portfolio with the breakouts that correlate and correspond with it. Right here was this takeout here of that traffic area above 685. So this candle today, especially impressive, let alone climbing the wall of worry against the weekend news and all that with the talks breaking down and Islamabad with JD Vance and everything else. So very, very good candles, obviously, here. And again, we've been above 50 RSI, as I said, since that ceasefire. The 2-week ceasefire got announced on April 8th. A lot of things changed. So right here, what are we targeting? What are we looking at here? I mean, obviously, seems like to me it wants to get to, about that 6. Honestly, I thought I was going to get tired before, but again, the all-time highs at 690. Let me just round for handle, 698. This candle doesn't look so bad. Let's see how we close the day. But I mean, again, it looks like once it gets to 695 to 698. I mean, this is before the war started, I had penciled, not ironically, new all-time highs for S&P. I think it was March 7th. You can watch the Feb videos. Then, of course, we invaded Iran, announced war that weekend, and then new all-time highs. So right here, my trajectory was literally I put it here, and then we started to give way, and then the war happened literally right there on the 5th, and then we broke under 678. Now, minus this whole, of course, like S&P almost always does, resolve to the upside, we are within that. So that's the call here. Don't forget, trees don't grow to the sky. This has been a powerful rally. And now you have the FOMO, which always puts fuel to the fire. It's kerosene. Not literally, but it is like gasolina. So 640, let's say, is when this rally started. And this has been just a 14-day runaway train. S&P's up, I think, 6% in the past 5 days. Absolutely ripping. So let's get into the charts here. Because there are some meaningful ones. Let's look at the biggest mover. Where are they pouring into? And I think you'll find a common denominator, and it is absolutely risk on. Kathy Wood, ARK. So this thing is still in purg, okay? The 200-day moving average is going up, albeit 2 cents a day. This thing has fell into purg a month before the war started. This didn't need Iran to say no thank you. So this has been, sub 50 RSI since it fell away. Corn style falling away from me from the moving average January 28th, and just now it has come above 50 RSI for the first time. So when you see movement in risk on assets, especially together, you can tell folks are digging in their pockets and saying, wait a second, I think the worst is over. And I do believe we will look at a VXX chart too to see where the overall price of puts are being priced in the market versus where they were during the peak of the war. So very important level for ARK here. I think it's got a little bit more to go, but not a ton more. Again, this is emblematic on the market. Do we take out new all-time highs or not? Crazy to even like consider this, considering what was going on and what happens when the 2-week ceasefire is over, which is happening last I checked at the end of next week or something. So this looks like it wants to target tops the 78 area. I want to see what happens. I think it's got enough to get to the 200-day moving average, which is 77.5, another $3 wide ATR on this buddy. It is on this baby. It is volatile. It's 2.6. So you could chase it right here for an extra, if it goes up $5 more. Be careful though, it's going to hit a wall here, I think, at 77.5. So a little bit, $3 more or so if you're in the trade. A very nice rally off of 65. Again, a lot of rallies off the lows in many markets here 2 weeks in a row. It looks like Ark, a fine poster child of risk. And for everything that's going on, I think it's got another $3, and then things get hairy for Ark. I wouldn't want to be a buyer there. But for here, another $3. Things are priced up here. You could probably do the July 77 or 78 calls. Again, sell something against it for April or May to help subsidize the trade. All right, the best fear to greed indicator, Ethereum, big move today, almost 2 sigmas, 3.5% move. It was up higher before. Be careful, you don't want to see them fade a mega risk appetite like this. And this is important here. We're getting equally to the levels in Ethereum on March 16th and March 17th. I'm looking at ETHA, the most liquid Ethereum ETF. However, nice rising RSI at basically 61, the highest it's been since holding its 200-day moving average. Good sign. I'm just a little bit weary of this area here, $18. It hasn't been able to recover ever since it absolutely fell out of bed here, down 13% on Feb 2nd. So I'm a little bit cautious of chasing this here, but it's had an absolutely outstanding week. I'll give you a teaser. It is the 3rd best performer over the past week. They've loved getting into Ethereum. Do understand that this rally began here at about 1480 and it's ran here all the way to 1760. In terms of the chart, I think it's got a little bit more to go. Like I said, a lot of these instruments, I want to see how the candle closes today across all securities. But things look like they want to go a little bit more to the upside if they're still chasing, Ark and Ethereum here. This looks like it wants to head to about $18, maybe $19, and fill that gap, this disgusting collapse it had on Feb 2nd. But I do want to point out the 200 moving average in terms of Ethereum ETF is massively way overhead at $24. That is still significantly away from where we are today. Should this continue to put in, maybe new 1-month highs and start to get to $20 and close it for say 4 or 5 days, then we could start to maybe tackle $24 where it was trading in mid-January. But for right now, Ethereum far away, but good to see it holding at least a week above a 50 RSI, something it honestly has not been able to do since September of last year. So thumbs up, Ski. And then number 3, these are the things that are gobbling up today. It's been Ark, it's been Ethereum, and it's been silver. If you're long one of these in your portfolio today, you are enjoying seeing the green. Silver right here up 5%. Don't forget, silver peaked at the end of January, which seems like a long time ago, at essentially $110. And then a beautiful, crazy reduction of almost 50% down to 60, rising to a moving average. Today, just today, it's finally gotten above the 50 RSI for the first time since early March. I had said before, called out, I think the metals look good here. It's not going to be a straight line, but they're going to head higher. And I did that. Let me check my notes here. Looks like April 1st. So VWAP on that day, April 1st, was $68. Here we are at 72. Now what? I think the metals look good here. I'm going to highlight at the end because we are going to do a yearly recap as well here. This looks like it still wants to get possibly to about 75. I don't doubt the story, silver, and what I'm seeing from the market year over year, let alone on the day. So I don't love, technically speaking here, the lower highs, but this looks like to me, from what the chart is telling me, I think it wants to get to 75, and then that is going to be it for this part of the rally from 61 to 75. That's a great rally, 14 points. What is that, like 22%? And then it'll probably take a breather, consolidate somewhere around that $68 level before it takes another leg higher. But I like the metals here. I think silver continues going higher in the short term, 1 week or so for silver. And they are loving it today. The 3rd biggest sigma gainer. So again, today, Ark, Ethereum, silver. Let's go to the losers. Energy down 2.5%. Don't forget, all-time highs here just 2 short weeks ago at call it $63, and boom, all the way to the 50-day. Lead comes at you fast from $63 to $55. 200 days still rising. The ugliest, the lowest RSI since October, and no one was even really mentioning an Iran war significantly back then. So XLE, a hard fall. Of course, we're still in the ceasefire period. This looks like it wants to carve out a base. I like that it has pulled back to the 50-day moving average. It's still dealing with where we were, even before we broke out here at 51 handle. But it looks like, to me, I mean, if things get horrendous, $54. I don't see it. I don't see them slipping it much below here, where we began, mid-February at $54. So I personally like the risk reward. If you want to buy into strength, get it close above $59, and that one's off to the races, as it will target again $62 to $63. So a couple of different ways to play that one in terms of getting into the stock. Energy not where it's at right now, obviously, because of all the risk on semiconductor all-time highs that is going on. So that's the energy story. Again, 2 more losers on the day, all energy related. XOP down even more than the XLE. These are not the flavor of the day right here. They haven't been the flavor of the week, actually. XOP, similar to what I said. For XLE goes for XOP. It's a different focus in terms of the upstream oil and gas. This thing's gone from 190 52-week highs all the way to 162, basically. So 163 very quickly dropped to the 50. Lowest RSI for it since essentially the year began. This looks like this wants to base. It may take another couple of days, but I do like the risk reward if you're able to get in this at around. This one's a little bit more volatile. If we go print new all-time highs, they're not going to go into XOP first thing after the run-up it's had, but they won't let it go through the floor and get oversold, I believe. So for me, possibly if things get ugly, they can drop it to 153, 155. Want to see what this candle looks like. They're still sending it lower. Today's VWAP is 165.07, and they set that lower. And right now it is just 30 cents from a new low of day, down 3%. So it's possible they drop this one as low as 153 in the next couple of days. And then again, in terms of buying the strength, if you want to see it close above 173, it's 21-day exponential moving average. That will probably be more wind to your back as it targets a 190 target to the upside, if that makes sense. So all those will correspond with being above 50 RSI and moving averages curling higher. Right now, it's more of a risk play, especially given the backdrop of chasing beta in equities. And then last one, I don't take a breath when I do these things. I got to go back to orders. Actually, I think I'm done trading for the day. It was a lot of, we pyramided into that biotech too. It's been working very well. So here's Nat Gas, the other loser on the day, down 2.25%. Wow. I want to call out when I'm right and when I'm wrong, but this one was a note. We had said, where was it actually? Where was it? I think this was a wrong call. So boom, I was wrong. I think we had said March 24th. In the coming, where is it here? I said Nat Gas, with everything that's been going on, it's very possible that it gets a rally. Should it cross above and stay above 50 RSI, as always, make a move towards the 200 moving average. It never happened, and now this thing looks like it's getting very close to 52-week lows. It is not getting the love of energy, as we just said. Energy is the whipping boy today, and it looks like it may continue to be for a little bit before it resolves higher. Right here. What can you say? Whoops, ugly candles here. This has just been an absolute dog, not above 50 RSI since March 20th. That's 3.5 weeks ago when it was trading 1230 right here. Again, I think this will try and base around ugly candle. This could go a little bit lower to about 10 even. Again, that's 4% from here. And then you get some kind of a dead cat bounce to 11.5. But I don't want to be here for that. Just pointing out what the charts look like. An ugly chart in Nat Gas. It makes widow makers of us all. In terms of trades, I don't really want to buy 52-week puts or buy puts on this. In terms of the 9 level, you could possibly sell 11 calls, but they're not going to pay. So I'm really just reading the tape here. This looks like it's headed towards oversold for the first time. It is actually lower RSI than it was when it actually hit 52-week lows on Jan 15th at 995. So the momentum with this is absolutely hideous for Nat Gas. All right, let's keep moving along. Top three gainers of the past 5 days. We got to look at what is really rocking it, and that is the SOXX, new all-time highs. I bought its basically sister, SMH, different weighting in terms of NVIDIA and the bigs. But here is SOXX, new all-time highs. When that is happening, you can't be super bearish global markets in terms of globalization and where we are in terms of technology, adoption, etc. It's just hard. The SOXX chart has been absolutely just impeccable, beautiful since early June without hard times. Sure, it's including the one recently that troughed on March 30th. But what we really want to point out, and why you're not super, I don't know if you want to call it super late to the game, but if you want to buy and say, you know what, I want to get wind to my back in a more confident environment, just buy the breakout. And what do we always say? Fractally, you can work it any which way. When you break out above a former resistance with overbought, they're going to buy. It's been a while because there hasn't been a bull market, it feels like. They're going to buy first and ask questions later. That level, for confirmation, we just got above the 70 RSI yesterday for this, and the actual price level broke out just on the 8th about 6 days ago. Once you really started clearing above 370 in SOXX. So this looks absolutely stupendous. Is it overbought? Yes, technically and figuratively at a 73 RSI, but that's just confirming the strength. My target had been honestly around, this thing just goes up, honestly around 385. So it's a little bit stretched by about, a couple percent to me. But what it looks like is when this does come down, it'll probably only correct down to 370 and maintain its uptrend. So I like the risk reward, especially from there. Hence, if you got in a couple of days ago and sniffed this out, congrats. I started seeing all-time highs, SOXX and SMH, and I said, oh, yeah, this is going to continue. And here's the thing. We said, how long can this continue? A lot of people have noted this as well because the Qs have a similar trend. You see the green bars at the bottom here? You may or may not. It's been green every day since March 31st. So it's holding VWAP today. It's been, voluminous, amazing volume on the 8th. So the SOXX, very important, critical piece of the market, and it's up 14.5% in the past 5 days, or an average of about 3% a day. Today, yes, inside of that trend by up 1.4, but SOXX, I bought it right here in terms of the SMH. If you too want to buy it right here, it is an 11.5 ATR. It's volatile, so you can call it $23 if it moves against you, get out. So it's at 400 now, basically. Take away 20. So if it drops to about 377, get out. Because it's very likely to go into about 369, 370, save yourself that difference and then re-enter. But the SOXX looks absolutely good. It's powering this move. Let's continue. And I'm so happy to see this. Anyang again, South Korea up right behind that. Again, tech is leading this. Differentiated part of tech, not Monday.com and Jira and crap names like that. No. It's been the semiconductors. We need chips. And it's been South Korea, the memory AI home. This looks great. Here's EWY. Don't forget the all-time high for this is 154. It is $9 away. This is above. Always be aware when one of the leaders year over year, a big mover like this, a silver, a South Korea, a uranium, whatever, when it gets above 50 RSI, because folks say, all right, my horse is ready to go now. Let's go. It's just kerosene again, and it's getting ready to go. So that level happened again with this massive breakout on the 8th. When it was up 10%, VWAP today was 139, and now here we are at 145. This looks like to me don't forget this trend, the recovery started at 120 for this name. I have it going to 146. Things have been pushing the envelope north, right? So maybe you push it a little bit more, 148, 150. It is South Korea. So that is there. The target for this, again, ATR is $6. You do two, it's $12. You can chase it right here. If it gets you to 132, get out because it could be very well headed to 128. And for right now, enjoy the gains. Again, the green candle, they're loving it. VWAP 144.21. They said mine. Hive day 145.47. They just said mine 5 cents ago. So this is absolutely a risk on appetite. EWI up 14% in the past 5 days, or average 3% a day. Today doing just that. The trend is your friend until the end where it bends is how I learned it. And then number 4, we just did this, so I'm not going to spend too much time, but Ethereum, your third best. Obviously the chart looks different for this, and not all-time highs or near it by any stretch, but Ethereum up 12% over the past 5 days, or more than 2% a day. Today, 2xing that, risk on today in a big way. All right, we alluded to this earlier. I want to take a look at this. VXX down 17% for the past 5 days, or an average of 3% a day. Today, doing just inside of that, down 1.2%. Very important VXX in terms of when the market got really freaked out in terms of the war. We really were in an elevated environment from March 26th when the bottom happened, essentially, in the SPY, and then we crescendoed on the 30th to nearly 40 VXX, and now look at us at a 29 handle. The level I was watching, and to especially get watching the market constructively resolve itself, was that 34 half level in VXX. Once that started to break and it gave back a ton on the 8th, it was a huge day. Obviously, when that ceasefire was announced, this dropped 10% that day. VWAP closed at $32. I said, we're getting away from 34 half quite a bit. And here we are at 29. VXX, as I said, down 17%, 3% or so a day. I think this will base around, in terms of levels here, at around 27, 28. So this still has about 10% or so to go, upwards of 10%, maybe closer to 7% in the next couple of days. Of course, if SPY is doing printing new or getting very close to new all-time highs, this should be putting in at least 52-week lows. Don't forget, that was put in the second week of January, where we had that tranquility, it seems like, and that was put in at 25.60. So good times are here again, is basically what the bulls are saying, and the pricing of the puts are telling you very similarly here, that the hedgers basically stopped being interested in this. They started March 6th, and it had a huge panic till about April 9th, and that's kind of it for vol. Let's look at oil. This was at the spectrum, at the whole center of everything that was going on. Oil down 10% over the past 5 days, or 2% a day. Today, more than that, down 3 1/3% is oil down. So this is corresponding, of course, with what we said with XLE and XOP to open the show. This thing hit, 52-week highs, 144 just 1 week ago. And then, of course, a beautiful drop, not to the 50-day moving average, but only to the 20-day. So more of a star performer. This thing hasn't dropped to 108. It only dropped, honestly, down to here. I saw the action, honestly, as bullish. It didn't say, liquidate oil and short Brent and all that. I said it's still above 50 RSI since all of 2026, and above a holding, rising up in 200-day moving average. I like what I saw out of oil. I think it deserves, part in your complex of your portfolio, but just be careful. This, I don't like when it's upping the trend inside of a day. So if it's down an average of 2% a day and it's down 3 1/3 today, they're saying no thank you right now. So I don't want to be the first to buy. The 21-day exponential, including when the ceasefire was announced, part of the strongest, most vicious parts of the war. The 21-day exponential moving average is 122. We're $2 away from that right now. We're roughly 1.7-ish%. Still holding 50 RSI. I suspect that to hold. If they drop it and the correlation of the beta play of energy is giving you, basically a beta play on oil, and they drop this as weak as they did on XLE and XOP, and that's leading the action, we'll see. But the Strait of Hormuz definitely has a different impact on the price of oil versus Exxon and Chevron, which makes up 40% of XLE. They may drop this to about $107. I'm not thinking that, and I do think around this 122 area holds, but my thesis I just said in terms of the energy oil upstream oil and gas tells me they could send this lower. The key will be to see if it breaks 120. If it closes below 120 in the coming days, I do think they drop it lower. Woo! Okay, and then lastly, I just did this earlier too, so I'm not going to kick a dead horse. XOP, the third biggest loser on the week. Again, exactly what I said. This one, they hammered it. Again, this is more of the equity, and folks were really selling a lot of things and asking questions later. So equities came first instead of the actual commodity of oil. So those dropped to the 50. Oil itself dropped to the 20. More star performer. XOP down 9% over the past 5 days for an average of about 2-ish a day, upping that trend. I think it hangs in here. I don't think the 200-day becomes in question, but also note the RSI at an ugly 41. Essentially, this thing has troughed at 35 all year. All right, top 3 trades of the past 5 days. What was the absolute killer way to rip this rally to the upside? Short VXX with a monster 17% loss. So if you just sold all puts instead of what your instinct probably said was buying puts and ensuring portfolio, you crushed it. It was the best trade in the entire market. And then long SOXX, I think you could still enter it right now. Watch your stops. That's the second best trade on the board after shorting vol. So up, and away. Those are 2 very enthusiastic trades. And then number 3, long EWY. And that's a beautiful segue into our next piece. Leaders of the year. I didn't have a Friday show. Apologies for that. Was a little bit busy with stuff. So the top trades of the year, we haven't done this in a little bit. E to the W to the Y. I can't wait for it to be included in the turtle portfolio again. This number right here, monster, 166% year over year. You could tell them there's a war. You could tell them Koreans, they have to pay a lot more for oil. Didn't seem to matter in terms of it dropping from 154 to 115 and resolving higher. As I said, it looks like this is getting very close to target. The candle looks wonderful here. This is your year over year leader. This isn't a fad. This is within, and it's important to frame it that way. This is $9 away from new all-time highs at above 50 RSI. This is the year-over-year leader. And as I said, last I checked, the second best long trade of the past week. So this is where they're pouring risk into. Pay attention to South Korea. I was saying it when there was champagne on New Year's Day, and nothing literally has changed. It's just gotten to me stronger. South Korea, do not avoid it. If you have a signal, as I said, you could chase it right here. I gave you the levels for before. Include in your portfolio. This thing rips to the upside. Number two, and we looked at this earlier. Again, this is the third best trade of the day after Ark and Ethereum is silver. Silver, your number two leader year over year, up 145%. It's not going away. They're chasing it today. They've been chasing it since last April. Look at that chart. Yes, it peaked January 29th. That's okay. The lower highs I don't love. I'm waiting for a breakout here. I think it's going to be a little bit slow due to the beta chase that's going on with S&P being so close to all-time highs, but they will understand the need for silver. I think this one for now, this leg gets to about 75 and then rests there before it tries to resolve higher into more so the month of May, putting in what I hope to be north of $85. Silver looks fine. Silver looks wonderful. I will include it in the turtle portfolio when the setup happens. And then lastly, and they're chasing this right here, right now, the third best trade year over year, new all-time highs today. SOXX up 129%, included in your portfolio. Right then and there, I've just given you the issue of why the S&P should be okay due to SOXX hitting new all-time highs, and to an extent due to the globalization of Taiwan Semiconductor also having a huge weighting to semiconductor, their market being okay, hence EWT also hitting new all-time highs today. So the S&P, as I said, even during the drawdown, S&P was going to have a fine year, 10 to 15, maybe even 20%, but there's other areas that are really going to provide the alpha, and that's looking like no different from South Korea, silver, and semiconductors. I will put another video up sometime, I don't know, Thursday or Friday. We will see, and we'll let you know if we do any more moves. But do take note, there's a lot of opportunity going on. Peace!